Welcome back. You have liked our detailed study of the Nifty for the last 20 years. We are now going to highlight certain macroeconomic developments that has happened, for which we tend to be optimistic despite the fact that the market is quite overheated in some quarters, especially real estate stocks, some power stocks like that. But still there are possibilities that we might actually see the bull market continuing. As yet, there is no clear signal that the bull market is getting over, but there can be a correction that can happen. Let's see what are the macroeconomic parameters. First thing I would like to remind you is this, that the Nifty is currently trading at 23 PE, and forward PE, if you look at 2025 March earnings, the projected earnings based on that, the forward PE would be somewhere around 19, so which is not very high. So there is still some scope that there can be some more upside, but there can be a sideways correction, that is always there. Nifty realty has shot up in a big way, so be a little wary of buying into realty stocks at the moment, because realty has moved up so sharply that there can be the possibility of a correction there would be far greater compared to other areas. Similarly, if you are looking at stocks like say power finance corporations or REC, these kind of stocks are rising vertically even on a monthly chart, so there also there can be some kind of a correction. But what is generally being seen is that why is it that we are seeing that money is still flowing into the stock market and stock market is not falling? The CNXMIDCAP is still going up. CNXMIDCAP is still going up because the SIP money and the retail people are continuing to buy. They are still buying stocks, and that's the reason why CNXMIDCAP, CNX small cap indices are still going up, and there is no dearth of strength, at least in those indices. Of course, the banking index is not all that great, and the Nifty is sort of a range bound situation, a seesaw movement. But what we now see, the situation at the moment is like this, that among the emerging markets, India is attracting new interest by foreign institutional investors in the recent months that has happened, and Indian domestic institutions are also buying. See, the situation there is that suppose if you are an international investor and you are looking for a cheap market, then that cheap market is actually China. China has suffered in a big way over the last 2 decades, and now with the realty crash, and so there are a number of problems that is creating some kind of an apprehension that whether the Chinese market can go up or not. But otherwise, Chinese market from a price earnings multiple or any other parameter, it is a cheap market. But what is the problem there? The problem is that the domestic investors, having seen the real estate crisis and other problems in Chinese economy, they are not investing in their own stocks. That's the reason why even the foreigners, the foreign portfolio investors, are not getting the confidence to buy into Chinese stocks. Otherwise, if you are looking for a value opportunity or cheap good stocks available cheap kind of thing, then probably China would have made the case. But that is not happening. Whereas in case of India, what is happening is that India is attracting foreign money, attracting Indian institutions money through SIPs, and retail participation in the market is also happening. So this can continue. Another development that I would like to highlight here is that there is a crisis brewing for United States. This is the mother of all markets today. I mean, for among the advanced economies, this is the biggest economy. But what is the problem? The problem is that US debt figure today is $34 trillion. $34 trillion means that US economy's debt size, the debt indebtedness of the US in monetary terms is actually the size of next 5 economies put together. Believe it or not, $34 trillion will encapsulate China, India, Germany, Japan and United Kingdom. So today we have reached a stage where every man, woman and child in the United States is indebted by more than $100,000. Per capita debt is above $100,000. From that perspective, if you look at it, look at India. There is an air of optimism. In India, people feel, at least a large section of the stock market participants, those who are investing in the market, they seem to be of the opinion that the current political dispensation will come back, gaining a sizable majority, and there will be policy continuity in the next parliament as well. So things are going to be pretty much the way it is even there. And what I feel is this, that a lot of people that I meet, they say that, look, if the policy continuity is there, then there will be good earnings on the part of corporates, so this rally can continue. Probably that belief is helping the market going further up. But there are pockets which are highly overheated, like I have mentioned, that is realty, maybe some PSU stocks. But some people are making a bogey of some banking stocks, say Punjab National Bank or Canada Bank. These kind of banks, if you look at their forward earnings, the kind of forward earnings that can be envisaged and that is being envisaged by a lot of analysts, they are not very expensive, even if they have gone up quite substantially. So there are pockets where buying can still happen, and we are actually saying that. But by no means we are saying that there cannot be any correction. And you have seen that during the 20-year bull run, there had been corrections as small as 3 weeks correction that has lasted for several months. That correction can be there, but the overall bull market is not going to go for a toss. At least there is no such signs. Now we are going to start our You Ask, We Answer stock review section. Here, the first stock we are taking up today is Amrutanjan. Amrutanjan looks like a value bet, but one thing that I would like to tell you is this, that yes, it has spent quite a bit of time below 700, maybe close to 650, but now it is still trading below its 200-day exponential moving average, which is at 629 as I talk to you. Based on this, what I would say is that it has failed to clear this 200 DMA despite several attempts. If you have already bought Amrutanjan, I would not say that you exit that position, because Amrutanjan might bounce back and it is a value peak, so you should continue to hold. That position you would need to continue to hold. But would you buy afresh? Would you add more? That you should do only when the 200-day exponential moving average is decisively taken out by staying above 630 at least for some time, and it would be better if you buy around 650, which would give you a clear signal that that has been decisively taken out. Coming up with our second stock. This is again a value pick, and this time there is a clear buy signal. This has corrected after a long correction. There is a kind of a rounding bottom formation on the weekly chart, and it is showing strength. So I would suggest that you buy Tim Lee's. Tim Lee's is now doing well. At least the price activity says that it is really doing well. Currently it is around 32.65. That was the last closing price, and I would suggest you put a stop loss below say 27.90. And what you can expect? Over a period of 12 to 18 months, you can expect 37.40 and 43.57. So first you can expect 37.40 and then 43.57. So 12 to 18 months time horizon, there is a good bit of appreciation that is possible. So you can buy Tim Lee's. I have discussed two stocks here. I do not have any positions. If you want to directly contact me for my services, then you can write to rkbose@rajatbose.com. That's my email ID. Or put a question in the comment section, whatever you feel like. Our stock of the week this time is ITC. ITC has crossed 450. ITC has moved up. ITC has shown resilience. ITC, I would say that you put a stop loss below 449 on closing price basis and continue to hold. The short term, when I say short term, I mean 3 weeks to 3 months. So ITC is expected to first test 485, and after that it can go to retest that 499.60 high. It can even go beyond that. So ITC is our stock of the week. I have discussed two stocks here. I do not have any positions.
Oh no. I have seen one thing, that you people are trying to access me, yet you are not being able to interact with me. To get to a solution, we have come up with a 3-tier membership plan offered by YouTube. In the basic plan, you are going to get emojis, loyalty badges, and number 3, priority reply to your comments. In the second intermediate plan, apart from what you are getting in the basic plan, you are going to get an early access to new videos. Apart from that, exclusive member only videos and shout out for any market development that is very critical for you. Now in the third and final premium plan, which I am telling you, it's good for you. All that you are getting in basic and intermediate is always there for you. Apart from that, this comes with a cherry on top. You are going to get an access to me live. You will interact with me and I will answer your queries.